How to find and take down creative financing for beginners. Guys, my name is Rick Ginn, and in today's video, I'm going to teach you three things. I'm going to teach you what creative financing is. I'm going to teach you how to find these types of deals in your local markets. And number three, I'm going to teach you the different techniques on taking down creative financing. But before we get into it, I need you to do me a favor. Make sure you smash that like button, hit that subscribe button to continue to receive the best up-to-date wholesaling information. You guys have heard the buzzword creative financing. What's it all about? And does it really have anything to do with wholesaling? And the answer is yes, it has a lot to do with wholesaling. So wholesaling is the art when we take down deeply discounted properties and we find cash buyers and we make a fee for doing that. And it is a proven strategy and it works well. Every now and then when we're working in our wholesale leads, we have people that their properties just don't fit the norm. Either they owe too much or they own it flat out and they just don't want to give it away at a deep discount. So once we know it doesn't qualify for traditional wholesaling, we can attack what we call creative financing. And truly what the definition of creative financing is doing any type of real estate deal that does not require traditional bank financing. And what that means is no banks are involved. There's no mortgage. There's no huge documents. There's no appraisal contingencies. All that stuff gets eliminated. And the reason it's so attractive is because you save a ton of time, you save a ton of money, and you don't have to go through the terrible process of being underwritten through a bank. If you've ever been through it personally, you know exactly what I'm talking about it. So let's get into finding out how to find creative financing deals. But before we do that, you have to understand there's basically two types of avatars for creative financing. Meaning there's two types of sellers. Number one is going to be what we call the high equity seller. And the high equity seller is someone who owns the property free and clear, meaning they have 100% ownership. There's no mortgage on the property. They just own it outright. And they've probably owned this property 10 plus years, which means they have long-term ownership. It's going to be important because I'm going to explain it later in the process. Now, the second type is what we call a low equity seller, owner, however you want to call it. And this is the person that's typically only own the property 2 years or less. They're typically a retail buyer, meaning an end user. They owe a ton against the property, meaning they have very little equity. They probably put down like a small down payment. That's the reason why they owe so much money on it. So you want to hear the terminology high equity owner, low equity owner, and understanding the difference between the two. And it's going to be important because in this next section, I'm going to break down on how to find these types of sellers. So high equity sellers for creative financing, they're typically people who rent out properties. They're going to wind up being landlords with a long history of owning the property. So I'm going to target anybody who's owned a property 5 years plus, and it might be 10 depending on which market you're in. And then I'm going to sort it out and make sure the properties are usually free and clear, or they have like 80% equity ownership in the property, meaning they own 80% or more of the property with a very, very small mortgage, if not free and clear. So these owners, the reason most of the time they sell creative financing, they're just tired of the property. They've owned it a long time and they've really gained the appreciation of the property. They've been through tons and tons of renters and they just get tired of it. And as they get older, they have other focuses in life. They don't always want to work with a wholesaler. And I like to find these people with anybody who's traditionally selling a property that has owned it like a really long time. I also find like landlords usually fit in this mold. Now, the low equity seller is these are people that have owned the property very little bit amount of time. So remember, they're more of a retail buyer. They bought a property and they made a mistake and they owe way too much. Now, the really cool thing about these types of sellers is they're the ones that typically cannot sell the property traditionally. Because think about it. If I owe a ton of money against the property, say I only put down 3 or 5%, and the property's gone down in value, that means I'm upside down on the property. And if I list it with a traditional realtor, I'm probably going to get killed, or I got to bring $20,000 or $30,000 to the closing table. The really cool thing about low equity sellers in creative financing is you are usually their only solution. They've tried the realtor, they've tried selling FSBO on their own, for sale by owner. They can't do it. So what I love about these types of sellers is you are the only solution. So maybe you initially approached it wholesale, they got on your list. Sometimes they get on there by accident and you've exhausted the wholesaling. Now you put on your creative financing cap and you can help them out And remember, most of these people bought the property, they had a dream and it didn't work out. What I like about the low equity is you're usually the only solution. So let's talk about the 3 methods on taking down creative financing. I'll break it down for you and tell you how it works. So number 1 is basically called the subject to. And subject to is exactly what it says. It means you just basically take over someone's existing mortgage. So let me give you an example. If you're buying a property for $200,000 and they have a $190,000 mortgage in place, you basically, theoretically, if you wind up giving the seller some money, anywhere from $3,000 to $10,000 to incentivize them to do the deal, then they would give you their mortgage to take over, meaning you would have to take over the existing terms of the mortgage. Is this legal? Yes, you're supposed to get bank approvals, but the reality is most banks, as long as they get on-time payments, that's all they care about. Their job is to service the loan. So I bought this property, $200,000. They gave me $100,000 existing financing. I'm making payments. I gave them a little bit of money. Hopefully there's not a lot of repairs on the property. And that's the key to doing these deals is you don't want a lot of repairs. And then I can take over that property. Now I can either rent it out, I can resell it and sell it with owner financing. There's a million options you can do with it. The advantage for you is you don't have to go through traditional bank financing. That's very expensive, it's cumbersome, and a lot of people don't qualify it for you. And you can leverage a lot more properties. You could take over 10 or 20 properties like this and not worry about your debt to income ratio with the banks. The banks do get nervous the more properties you get. So doing creative financing helps alleviate this. Now, as far as the seller, think about this. They have to pay to sell the property or they're going to wind up not making payments and going into foreclosure. So most of the time we're subject to you, the wholesaler, bringing this creative financing strategy. Subject to is their savior, meaning you save their credit, they don't get foreclosure, and they can move on with their lives. And here's the really cool part. Most of this can go down in less than a week. So you just review the title with your title company and then you write up an agreement. The agreement is no different, guys. There's just a little section on the contract called subject to the existing mortgage, and you put that into place. And that is it. So understanding that all sellers of subject to have to be 100% cooperative for this to work. So you can't talk them into it. So make sure they're completely comfortable with you because you have to work through them with the paperwork. The idea is create a win-win situation. So that's subject twos. So the next one is basically what we call owner financing. Okay. Now, owner financing is only a good fit for the avatar of the high equity seller. And that's someone who's owned the property a long time and owns it free and clear. And basically they become the bank. Okay. They are the bank. They own the house free and clear. So if you say you're going to buy the property from them for $200,000, maybe you give them 5 or 10 grand down, and maybe you put nothing down. But guys, the really cool thing about creative financing, there are no rules. Whatever you and the seller negotiate is wide open and it's fair game. So in owner financing, the seller winds up being the bank. And the reason they want to do this is, number one, they're tired of the property. They've already ridden up the appreciation. They've had a refocus in life. A lot of them are tired landlords. And think about this. They don't have to deal with the headaches of managing tenants. You just assure you're going to make the payments. They get a note in exchange for it and everybody's happy with it. And the other advantage of why a seller would do this is a lot of them have tax issues and they don't want to pay the big gains on the run up on their house. So they'll do this as a deferred tax strategy so they don't take all the profits up front. And obviously, if you're buying an owner financing, once again, you don't have to go through traditional bank financing. You don't have to get appraisals. All this is expensive stuff, all the like really, really pricey closing costs. And once again, you get to leverage the creative financing, which is going to allow you to buy more properties. Guys, owner financing is really valuable. The types of ones I like to find are people that are renting these properties out that are tired of renters bringing them up. And what I want to do is say, listen, why don't I just buy it from you? And then you want to get someone in favorable terms. Now, I will tell you on owner financing, typically their incentive for doing it is that you pay their price. So owner financing is more about the cash flow, meaning whatever your payment is and what you can rent it for, or what you can sell it for. That's the important part. It's actually, you have to look at that almost first before you look at the pricing on it. Because remember, on creative financing, you're either getting terms or you're going to get price. So when we talk about creative financing, we're always focusing on the terms because you have the ability to be creative, and that's the value of creative financing. So option number 3 is a strategy called lease option. Now, I'm just going to simplify this in the most simplest terms so it does not get confusing, because I've seen a lot of explanations where it really like goes over people's heads. So lease option is a 2-part structure. Okay, so you all know what the word lease means. Lease is just a fancy word for rental. Okay, so if I'm going to lease you a property, you're going to rent it for X amount of dollars for X amount of time. And you got to follow the terms of the lease agreement. That's it. So you guys understand that. So we got that out part. The added element for a lease option is the word option. And option just means you have the option to exercise and purchase the property for a preset price, for a preset time, for a set fee. Okay, so let me explain this out. So if I entered into a lease option with you and say it's a $200,000 agreement, and I tell you what, I'll do $200,000 and then I'll rent it out for $1,500 a month for the next 3 to 5 years, whatever it is. You got to follow the rental agreement. Then I went into another agreement. These are two separate agreements. Why are they? It's an option agreement, and maybe I leave you $1,000 up front. Once again, it's completely negotiable. The beauty of creative financing, in whatever it is, $1,000, $3,000, maybe it's $100, is I have the ability to buy this property within a 60-month period. Maybe it's a 120-month period. The term is completely up to you. If I did 60 months in 5 years, I have the ability to lock in that price at $200,000. And if I want to move forward, then I basically have the option to do it. Now, the really cool thing about an option is there is a memorandum that's recorded that expresses your option in public record, so nobody can go behind your back. And then here's the really cool thing. Say it doesn't work out on a lease option. What's the worst that's going to happen to you? You just walk away from your lease option, your option price. So if you gave someone $1,000 and you didn't buy it in 5 years, it's just a rental. You lose your $1,000 and you move on. Or maybe that property's gone up in massive value, the rents have gone way up, and you definitely want to cash it out. And here's the really cool part. You can either cash it out, you can refinance it with a traditional bank, or you can go back to the owner and get more creative financing terms. Guys, there are so many options in creative financing. I want you to understand these three are the main ones that most real estate investors use. Now, guys, I like wholesaling. Wholesaling to me is the fundamentals of where you want to start in real estate investing. What I want you to understand is creative financing is a tool you can add to your toolbox as a real estate investor. It's important you start out as a wholesaler and understanding when creative deals come up. You understand how to explore them. Now you know how to find them. You know how to locate them. You know the two types of avatars of creative financing sellers. And then you know the three strategies, which is basically going to be the subject to, the owner financing, and the lease option. So guys, I want you to use creative financing and add it to your wholesaling toolbox. And guys, this is just like the beginning. It goes so much further than this, but once you understand the concept and the theories, and now you're using your eyes to look around for these types of deals, you now have all the tools you need to get started on a creative financing deal. Guys, let me know, which strategy are you going to use in your wholesaling business so you can help out more sellers, you can do more deals, and you can definitely close on more contracts. Guys, let me know in the comments which method you're going to use, and do me a favor, make sure you smash that like button, hit that subscribe button. This is Rick Ginn, and I'll see you in the next video.